Hello everybody, this is Lara from pureelliottwave.com. This week, for the next few days until the evening of Thanksgiving Day, which is next Thursday, I've got my online course, Learn Pure Elliott Wave, on sale. It's 40% off. So I'll put the link to this page on my website just down below. So to get your 40% off, you have to use the coupon code, and it's on here on my website. So I have updated all of the introductions, and I've added 2 new supplementary lessons, one on Fibonacci ratios and one on practical application of Elliott Wave rules for trading and investing. So on this page you can see a full detailed outline of exactly what's in this course and some testimonials from people who have used it. Okay, let's get into HUT. My challenge this week is to give you one free analysis every day for the next 7 or 8 days until I leave Ecuador. And so this was requested from one of my members. This is HUT 8 Mining Corp. I'm going to do a quick Elliott Wave count. She says quick. Oh, it's just never quick. It's never quick like I like. And then I'm going to do some classic technical analysis. I'm going to start my Elliott Wave count at this low, the March 2020 low for HUT. And from this low to this high, the first thing I see on this chart is it looks like a 5 up. It looks like 1, 2, 3, 4, 5. So if that's a 5 up, could this be a 3 down? This, from this high to this low, could be either a single or a double zigzag. So let's see, this was from March 2020 to November 2021. So it's just over a year. Well, a year and a half. So it could be a cycle degree wave, but it could also be primary degree. That's one of the hardest things to figure out when you start a new wave count, what degree to label a movement. So look at how long the movement takes and then fit it into that expected duration of how long a wave should last. And I'm going to try cycle. When I'm talking about how long a wave should last, this is what I'm talking about, and you can get this for free on my website, quick and easy download with one click. Don't even need to give us your email address. Elliott Wave notation, little free PDF, and this is the notation and the labeling I use. So if you don't already have that and you're trying to read my wave counts, that would really help you. And it gives you a handy, let's pop back there, how long these different waves should be expected to last. So cycle degree, 1 to several years. Primary degree, a few months to a couple of years. So, I mean, it could be either. It's over a year, so it could be cycle, but a few months to a couple of years, it could also be primary. So I'm going to go with cycle and be open to changing the degree down 1. But let's start here with cycle degree. I think this looks like a good 5 up, looks like an impulse, not a diagonal. So a first wave may only subdivide as a 5-wave motive structure, so that's either an impulse or a leading diagonal. That one looks like an impulse. Let's expand that out so we can see. I think primary 1 also looks like a pretty good 5-wave impulse. I'm not sure that I'd put intermediate 1 there. I think I'd put it here. And intermediate 3 might have a quick shallow 4th wave in there. I'd have to look at the daily chart level for that one, so I'll just check that when we go to the next time frame. Primary 3 looks like a pretty good 5-wave impulse. No, I don't think I'd put intermediate 1 there. I think I'd put it here, because then intermediate 3 looks like a pretty good 5-wave impulse. Yep. Intermediate 4, primary 4 could be either a single or double zigzag. Primary wave 2 looks like a single zigzag. Primary 4, I think this looks better as a double zigzag. Nope, I put this here. And I think I can see a zigzag here for intermediate W and a zigzag here for intermediate Y. So they're the same family of corrections, a single and double zigzag, but there is some alternation in there. Single zigzag for primary 2, double zigzag for primary 4. That looks okay. I think primary 5 looks like a really good 5-wave impulse as well. Let's look at these wavelengths. So this is a semi-log scale. And so I had some very strange comment the other day on the YouTube channel that because of the scale, one of my waves didn't look long enough. I'm like, that is because of the scale, but it is actually longer because of the scale. So this is how a semi-log or log scale works. The higher you go, the more squished it up it is. Lower movements down here are more spread out. And that's because as you go higher, volatility tends to increase and range increases. And so in order for it to have the right look, let's look at it on an arithmetic scale. This is what it looks like. Slow start, explosion moving up through the middle, explosioning at the end of the third wave, and then the fifth wave. And so here you can see that the third wave is longer than the first, and the fifth wave is longer than the third. But when you view this on a semi-log scale, you can't see that the fifth wave is actually longer than the third. But it is. It's 13.42. You can see this number, 13.42 here, and primary 3 is 12.415. Okay, let's have a look at the structure of cycle 2. I think this could actually be a double zigzag from this high to this low. This looks like a zigzag, A, B, C, and from this high to this low, this also A, B, C, but I expect C to go down further, possibly to reach equality in length with A to have a better look. No, we'll put this here. And I think I want to see that there. And then here. Oh, I see a problem in here. Okay. A, that doesn't look right. I want to put A here, but then B would be a running flat. Oh, I don't know about that. Okay, I'm going to save that, and I'm going to use now a daily chart and base it on this analysis. I just want to have a look before I get into cycle 2. I just want to have a look at intermediate 3 down here. Oh, no, I think intermediate 1 might be over here as a diagonal. Well, I don't know if this is actually going to work. I'm checking wavelengths. Oh, no, it doesn't. So 3 is longer than 1, but 5 isn't longer than 3, and 4 is longer than 2. I have long suspected that within diagonals, sometimes the third wave may be the longest. As long as all other rules are met, then the structure may be valid, but I haven't done enough research in order to be happy enough to rewrite an Elliott wave rule like that. 5 has moved beyond the end of 3, yeah. Oh, well, I wonder if this could be the first piece of evidence that maybe that rule does need to be rewritten, maybe, because that is a tendency of a third wave. They do tend to be the longest, and so long as for this one, 4 is longer than 2 and 5 is longer than 1, which it is, and the trend lines are diverging, it meets all other rules for a leading expanding diagonal. It could be, and I can't see how else to label primary wave 1. I'm going to leave that there for now with that understanding that that labelling would require a rewriting of an Elliott wave rule, which I'm not really happy to do at this point. When I have finished all of my online courses and they're all launched, I've got 2 more coming up actually, when they're all launched, then I'm going to continue that research that I started some time ago. I'm happy with primary wave W, happy with primary X. Yeah, let's have a look at Y, and I don't like the look of this B wave. Oh, actually that could be a triangle. No, seems a bit forced, but let's put the labels in, I'll show you what I mean. I don't actually know if this market has sufficient volume for a decent looking Elliott wave structure though, to be honest. It looks a bit sparse and gappy. Don't like that at all. Okay, so I think I'd rather leave... Oh, okay, so what if intermediate B is a combination? So W could be a zigzag. X over there, and then Y could be a flat correction. I'm just grabbing my calculator and double checking that minute B is more than 90% the length of A. It sure looks like it. Yeah, it's 96%. C doesn't look like a very good 5-wave structure though. Not happy about that at all. You know what? I don't think that Hut 8 Mining Corp really has sufficient volume for a good-looking Elliott wave count. I don't usually do Elliott wave analysis on individual equities because they just don't tend to have enough volume for good-looking Elliott wave count. So let's use some classic analysis on Hut. Let's start with the weekly chart. Support and resistance. There's good resistance about 3.56. There's some support here about 1.55 actually. Yeah, 1.33 actually, possibly a little bit stronger. It looks like it's breaking below that support now, so next support 0.6, 0.58. So about the 0.58 to 0.6 area. So there's a little bit of white space here that it could fall through to get down there. On the weekly chart, this last completed week, this week, has pushed from volume. The very last week here is incomplete, so we cannot draw a conclusion on that. But last week is complete. It has pushed from volume quite strongly. On balance volume, there's no divergence yet from on balance volume. I can't see a decent range that on balance volume would be in, so we can't use resistance or support on balance volume for a signal here at this time. ADX is declining. There is no clear trend at this time frame. This previous downward trend was indicated by ADX on the weekly chart, and now there was a consolidation. Now prices looks like it's getting ready to break out lower. ADX is still declining. RSI reached oversold at the weekly chart level at the last low. It's done that before. It did that back here, and that wasn't the low. And then there was another low and bullish divergence. And then there was a big consolidation and another low and further bullish divergence. So for this one, doesn't mean that the low has to be in. That could develop further with bullish divergence. Money flow index, neutral. ATR, flat as price has been moving sideways. Stochastics moving into oversold. At the daily chart level, price is moving strongly lower. Overall, there is some push from volume. This last session here is incomplete, so we cannot draw a conclusion from that. This one looks gappy. I can see probably a measuring gap here. Let me just check and see what the target for that would be. The target I calculate from this measuring gap would be 1.1. So that would be a short-term target for an expectation for more downward movement. But before we get that, we need to see price close below price support. This low here, 1.27. This current session, we need to see today or in the following few days, price close below support at 1.27. If we see that, that would be a classic downward breakout. If we see it with an increase in volume, that would be impressive, but for a downward breakout, we don't need to see increased volume because price can fall of its own weight. Overall, as price is moving lower towards support, volume is increasing. The last three sessions, not so much, but overall the trend is an increase in volume. On balance volume is declining as price moves lower, confirming that downward movement in price. There's no bullish divergence I can see yet, though. On balance volume gave a bearish signal back here on the 2nd of November. It broke below support. This support line in blue on balance volume is nearly horizontal, fairly long held at the daily chart level, and it has multiple tests. On balance volume broke below support, a back test of resistance, slightly moved back above the trend line, and now it's moving strongly lower and away. ADX is increasing at the daily chart level. There is a downward trend, and there's plenty of room to go before this trend is extreme. RSI is nearing oversold, but it can move reasonably oversold and then exhibit bullish divergence as a downward trend comes to maturity. There's quite a long way to go before RSI indicates a strong warning of concern for this downward trend, so I would expect it's most likely to run. Money flow index neutral. ATR declining as price moves lower for the last few sessions. This is concerning for a bearish case, however. While price can continue to fall for quite a long distance and time with light and declining volume, when it's falling with decreased range as well, that is of some concern for a bearish case. Stochastics oversold. Okay, so my conclusions for HUT. Watch RSI carefully at the weekly chart level, and for today and the next few sessions, watch very carefully to see if price is going to close below support at 1.27. Now, depending on your risk appetite, you may take that as confirmation of a downward breakout, and then you might also want to use a 3 days away rule, 3 days away after the support line before you're really confident of that downward breakout. But because we have ADX indicating a downward trend, volume pushing price lower, and RSI not exhibiting strong warning signals for the downward trend, I would say a close below 1.27, I would take that as quite bearish. That's my conclusion from HUT. And if you're learning Elliott Wave, or you've just been introduced to Elliott Wave, or if you've been learning it for a little while, I'd still highly recommend that online course I've developed. It's really comprehensive. I'm a qualified and experienced New Zealand educator, so in conjunction with my chartered market technician designation, I'm perfectly positioned to teach you something complicated like Elliott Wave. So if you want to learn it in depth and you want to know how to apply it, I think that's the course for you, and it's on special until the evening of Thanksgiving Day. Thank you.